Well, I want to be respectful. I say this every time, but to be respectful of your guys' time because you showed up on time. I want to get started. If other people show up, they'll just have to join us. So today we have Solitude Mortgage here and recording. Eric's universal side. I forget to record sometimes. Like shit. We do want to record this so we can share it with you later. And I haven't gone through the slide deck yet, but I will have a copy of the slides available to you guys. That's cool, right?
Yeah.
I
mean,
I can share those.
We usually charge for them, but for you guys,
it's already in my email. This is my computer. So no, some title companies are weird. They won't let me share.
Oh, really?
Yeah.
No, we're an open book. So
Awesome.
Feel free.
So we have Jake and Josh here, Solitude Mortgage, and I appreciate them putting this together because they kind of like filling in last minute. You won't know that. I don't even know why I said that, but we had somebody else lined up. It's like, yeah, just in case they suck, they're winging it today. No, I should give everybody an out like that.
Yeah. It's gonna be a lot less funny
in case they've never done this before. Yeah, right. So I'm going to just turn the time over to them. I'm glad everybody here is actually in Utah. I know often we have people, from our team in Oregon or Washington, Idaho. We have some regulars from Florida jump on. As of right now, they're only licensed in Utah, which is fine because most of you are in Utah, but they are branching out into other states. So keep that in mind. And if somebody watches this later that is in another state, these principles still hold true. So if you're working with somebody in your area, then of course, this is going to give you some good info on getting this type of a mortgage through, and you'll at least know the questions to ask and vet out the right person for you guys to work with. So I'm going to turn the time over. Are you going first, Jake?
Yeah.
So Jake's going to slide over in front of the camera, and we'll go first. His slide deck's up and ready. So Jake, take it away. And hopefully this works. You can use that if you want for clicking or the mouse, either way. Do your slides.
Okay, here we go. Cool. Thanks, Jeff and Lynn, for having us. So he wasn't exactly joking about the last minute thing. I think I got an email Monday afternoon. hey, what are you doing on Wednesday? So we do this pretty frequently though. So we had a couple things prepped, and then we've actually. So we didn't want to make it super boring for you guys, right? So we've actually got two presentations. We've got the one that you see now, and then hopefully we can pull up that second one. The second one I personally made, and I think it's better than this one, Josh. But you guys can decide. Maybe this one is better. I don't know. Right. Yeah. And so we didn't want to make it really boring. I know sometimes if you get on, you start getting 30, 40 minutes into it, it's like, oh man, these guys are still talking, so we'll try and keep it engaged. If you have questions, it's not one of those situations, where hey, hold on, let me finish, right? If you've got questions, jump in. That's why I brought Josh in the corner. I don't actually know anything, so I'm just the pretty face. So give me two options. Okay, so that's me. I didn't put Josh on there. He's not as photogenic as I am. He's also the co-founders of Solitude Mortgage. So a little bit on us. We've been in the loan business since, I don't know, 2015 now? Yeah. 2015. So we've been doing loans for quite a while. The cool part about us and our business, we're very, as you can see, we're very casual. We're very laid back. We're not just another, I don't know. I find that the mortgage space can get really boring. Like real estate agents as a whole, it seems like there's younger agents, there's new agents coming in. It's an attractive place to be. And then you look at loan officers and they're all like 60 years old and they've been doing it since the 90s, right? And so it's nice for us to step in. I feel like we bring a breath of fresh air to the space. People like working with us, especially because millennials at the moment are the #1 buying group for new homes, right? Millennials are going to be buying homes and selling homes more than any other generation. over the next 10 years. And so we slide in, we fit very well. We are millennials. We're good looking, we're handsome. So we check all those boxes, right? Yeah, we hit it. We listen to good music. It's great. So a little bit about us and why we started Solitude Mortgage. So I know these slides are on there. I'm not really going to read them, so you guys can read them if you want, or you can just listen to my beautiful voice. But a little bit about why we started it. So we started working for mortgage banks, right? And a mortgage bank are the ones that you'll see off the freeway. Academy Mortgage, Security National. I don't know if they're up in Washington. I know Academy is, and all, who else we got? Who have you worked for? You've worked for everybody. Citywide, New American Funding. We've got 10 or 15 of these companies, and they operate in a way that they can close a lot of loans, but they're paying a lot of people to do that, right? You've got regional managers that you got to pay a $200,000 salary for. You've got these president clubs trips. So anybody that's hits a certain amount of volume, they're paying for these trips. Now, that's all good, right, from an employee standpoint, but from a customer, from a buyer standpoint, all that means is that you're paying more in margin, right? Now, if I'm getting a mortgage, I don't necessarily want to pay some regional managers $200,000 salary just for me to buy my house. And so that's kind of why we decided on this presentation, this first half. We've got wholesale versus retail, right? And I've got a cool little video that's going to explain some of the difference here. So I'm hoping if I push next, it'll play. Yes. Okay.
Meet your local licensed mortgage broker. He's not a big corporation or a bank.
It should be.
He doesn't advertise on TV.
I don't know how to pause it.
He doesn't do car loans, trade stocks, or offer checking accounts. He does one thing, and he does it better than anyone else. He shops for great deals on mortgages. So why get a personal shopper for your mortgage? Because you want an advocate. Choices. Lots of choices. Choices set up competition between lenders, and that's good for you. The salespeople at banks and big lenders can't show you the big picture, but a broker compares deals from hundreds of banks and lenders of all sizes across the U.S., then organizes and presents those choices based on your location, financial situation, timeline, and other factors. He can then help you choose the best mortgage for your circumstances. And a better mortgage can save you time, frustration, and most importantly, $20, $50, even $100 or more off your monthly payment. So when it comes to the biggest purchase of your life, don't take the first offer that comes along. Get an expert who shops on your behalf. Get an independent mortgage broker. You can find a licensed mortgage broker at findamortgagebroker.com.
I don't like that video. There we go. So some of the major differences, right? Again, back to this reason why we wanted to start Solitude Mortgage. We come from this retail space. We come from these big mortgage companies. We know how they operate. And so these are some of the limitations on that retail side. So they've got a very static relationship with their investors, with the people who are actually funding these loans, right? So what that means is there's a very specific box that you can fit mortgages into, and there's a very high associated cost with those mortgages. They've only got access to in-house products. All of their underwriting is in-house. So essentially what that means is if you're trying to help a customer buy a house, you send it to XYZ loan officer, and their underwriting says, nope, we won't do this loan. They have no recourse. There's nothing else they can do. Their underwriting declined it. But if you go with a mortgage broker like Solitude or another independent broker, we've got multiple options that we can go through. I think we're at 5 or 6 back-end banks right now that we can shop these loans to. And that gives us more products to utilize. It gives us more options when a denial comes in or when XYZ conditions need to be met. we've got a lot of different places that we can send these loans. So I just want to pause just for a quick second after the video. We're looking at this nice little slide. Anybody have any questions on some of the differences there, or is this all just getting repeated?
That's excellent.
Makes sense.
Cool. And the other part, the other nice part is that we're a very flat organization at Solitude, right? I mean, you've got 2 of the 4 co-founders right here giving this presentation. If we need to make specific stuff happen, we've got the ability to be dynamic and to do that. So just a couple little thoughts on the retail versus the wholesale. So it's highly beneficial for your buyers, for your clients to actually shop for a mortgage, right? Just as a quick example, a good friend of mine, he is going with one of these retail banks. He's like, oh, well, it's a friend of mine. I know him from the past, right? Similar reasons as to why people use you guys as real estate agents. I say, okay, I get that, but the end product is generally about the same across the board for these bigger banks. If you work at a bigger bank, the pitch to the loan officers to stay at these big banks and keep originating loans at these banks is that they can actually get loans done. If you go to a big you go to an independent broker, they don't know how to do loans. You're going to have conditions. You're going to have X, Y, Z. That's not the case, right? We know that because we're dealing with all of the stuff of starting and operating a business as well as closing loans. And it's actually easier for us to close loans here than it is for us to close loans 2 years ago at Security National, substantially.
That's cool. Nice.
It's very, very nice. I don't know, have you ever called underwriting and had to wait to get an answer back?
No.
It's like these wholesalers that we send these loans to, it's like they have call centers of underwriters. We could call them right now. They would pick up the phone. We could ask them a specific question about a specific file, and we'd have an answer within 5 minutes. You cannot do that. There's like this barrier between loan officers and underwriters at these other banks, and it's a really awkward relationship, right? Like, I don't know.
They walk down the hall, we can't look at them in the eye. There's like
Yeah.
all these,
Yeah.
it's like Steve Harvey running the show.
It's
break room together, get weird. Yeah.
Yeah.
Super weird, this awkward silence.
yeah, and it's so true. It's exactly what that's like. We don't have that type of relationship with our underwriters. And so what that means for you guys is you can call us and say, hey, I've got this super funky thing, right? This guy was deployed overseas. He came back, he started a business. He's got this inheritance coming in. Like, I don't know, what do we do, right? Okay, well, send us some info. We'll get it to underwriting, and we'll know before he even takes an application, before he even does anything, exactly what we need to do. And that's a huge benefit for us, right? And so the other side of that, this shopping for a mortgage scenario, back to my friend that's going with his friend at one of these big banks, I've been making him feel guilty, right? Telling him that he's not gonna be able to sleep in his house because he knows he betrayed me, that type of thing. No. But the point is he's getting an FHA loan, right? He's doing a loan where he doesn't have to put a down payment down by Utah Housing, and they quoted him his loan estimate's like 2.875. We ran the same scenario for him yesterday. What did we pop out at?
2.3, we can cover closing costs.
2.3 and some cash on the top. Like I'm telling you guys, these banks are paying 5 or 6 regional, these regional managers $1 million a year just in salary. That's where that extra cost is going to. It's not like he's going to get a more correct mortgage, right? He's not, it's still a loan, but how much does it cost and why does it cost that much? Anything above really what we charge, we're based on what our rep is telling us, we are one of the lowest charging brokers, the lowest, right? And so that's, yeah, go ahead.
So as far as approvals though, because I mean, there are certain situations where, I've had different lenders look at the same situation, none of them will do it, but then I've got one guy that will do it.
Yep.
And it's because he's willing to work it, right? He's willing to figure out how can I do it? So is that the same scenario? I mean,
Yeah. I mean, that's essentially, it all comes down to that, right? Like I came up working primarily with the Hispanic market.
Yeah.
So it's a lot of extra hustle.
Yep.
To get a lot of those
Yep.
deals done. So yeah, I mean, it's the same scenario. Obviously, when I was working at retail banks, there was like a limit as to what they would accept and what they wouldn't. And that was one of my main concerns when we were starting the brokerage. I was like, I knew I could close loans here, but can I still do it here? And it's actually been way better. So yeah, but you're right. I mean, it definitely comes down to a lot of loan officers will turn down any file that requires like any kind of extra.
yeah, and you work, right? The computer says, no, I'm done.
Yeah.
But it's like, hey, put some work into this and you can get the deal done.
Yeah. So yeah, I mean, I'm used to doing stuff like that. So is Jake. I mean, we don't like to not do deals.
Just to qualify what he's saying, the foundation of what Solitude was built on was doing loans for people who don't have a social security number.
I'll take that challenge.
It's like if you send us a deal, dude, I don't know. Our philosophy is, yes, we're going to do this thing. Just don't ask any questions. Like, don't look at it too close. Let me look at it. It would have to be in dire straits for us to not do a loan. But like, to not, and it's so true. I mean, one of the branch managers I worked for when I first started, I approached him. He spoke Spanish, and I was like, hey man, like, these guys are looking at buying a $250,000, $300,000 home. I know you speak Spanish. Like, do you want to help me out with it? He's like, oh, it's not worth my time. It's like, okay, why? Why not, right? And that attitude kind of permeates this. I don't think you were here when I was talking about we try and bring kind of a freshness to the mortgage space where we're not that same 50, 60-year-old guy that's been doing loans for 40 years. Yeah.
Watch where you're going with that.
I just assumed you were mid-30s.
Nice save.
So we try and bring that freshness, and you're not gonna come across the same kind of like boring old answers, right? It's like, oh, this guy wants a loan. Let's fund it with hard money first, and then let's figure out how to do the loan on the back end, right? It's like, we can do a million different things.
You said hard money, these three went away.
Oh. We've got some stuff in our next presentation. You guys do like real estate investing stuff. We got some stuff in our next one it's gonna be awesome.
While you're on this topic, I know we've had other conversations, but as far as like taking on the loans and stuff, talk a little bit about your timing and average days to close and stuff like that.
We ran a report a week or two ago, and what were we? I think we were 7 or 8 days.
8 days.
8 days.
From initial submission.
So we move them, dude. We don't mess around at all. Loan gets in, we pump that thing through.
You guys have employees that do this for you too, or is it just you two?
Yeah, so we've got, employee,
We've got
we've got one.
Just because time is limited, right? It's like how
Sure.
much can you guys handle? Do you guys have people you guys manage that can do more?
Yeah, so we have an assistant right now.
Got two other loan
We have
officers.
2 other loan officers that are basically operating as like junior LOs. And then if we need to, we'll hire more, but we haven't needed to yet.
And then who finds the creative solutions? Is it you guys or is it the underwriting team?
Us.
You guys.
Us, yeah. Us. So basically the way that the relationship works, right, is you bring us the funky loan that another loan officer said he wasn't interested in. We look at it, we decide, okay, here's what I think we can do. And then we've got underwriting on the phone 5 minutes later, and we're walking through it. Hey, what do we need to do? Oh, okay, all we need is X, Y, Z, right? And then we get that and push it through. It's very rare. Like if we can't do a loan, it's for obvious reasons, right? They lost their job, they had a bankruptcy, they had whatever, that nobody's gonna fund that deal. But if it's kind of a borderline thing, chances are we're gonna slam it through.
Do you have other products too besides just traditional loans, like you do equity lines or?
Oh, the next presentation we're gonna do, we don't do equity lines, we don't do like subordinate mortgages, right? But the next presentation we're gonna do is all on bank statement loans. Send us 3 months of bank statements, we'll give you a mortgage, right?
Wow.
Yeah.
So we'll get specific on that, but
And that calculates, or that takes into, investment properties too.
yeah,
And so
Yeah,
we can
that's
also
cool.
send our refi clients to you,
yes,
and where are you guys at a 15-year, like right now, do you know?
Conventional?
conventional,
Mhm.
doing some change.
2.1 or 2%.
Yeah.
Awesome. Just wanted to see where you're,
Yeah.
where you're at.
I locked a 10-year the other day at 1.9.
Oh my gosh.
We and that's just the reality of it, right? We've got a really cool office space we're building right now. It's one of our partners owns the building, and so we've got a super discounted rate on the lease, right? Like we are so lean and so scrappy, but then we can just handle anything that comes through. So what that does is just gives the client or the buyer the best possible pricing available, right? It's just kind of that perfect storm of, okay, these guys are actually capable, right? I mean, handsome too, right? But they're capable, and they're in a state where they've set it up very strategically to give me the best cost possible, and we're still going to close faster typically than, just getting plugged in as another buyer at another mortgage company.
And the reason why you guys can do this is because you're doing so many. So if you do more and make less than you would if you did less and make more, that's kind of what your
Yeah, I mean,
objective is.
essentially, if you want to get real technical, I like mortgages. I'm weird, so.
He likes the boring parts of the loan. Yeah.
You're the guy that we like.
But essentially, like any retail mortgage lender, they have to make anywhere between 4 and 5% off of every deal that they make, to cover all of the overhead, be it regional management structure, branch manager, override,
Processing,
underwriting, closers, funders, everything, the building costs. Whereas we only make between like 2.25% and 3%, like 3% on a liquid. That's a lot.
yeah.
So like from a loan officer perspective, all their comps are the same as what they were getting at retail lenders. But since we don't have a ton of overhead, we're able to transfer those savings onto the buyers.
And who pays for your mortgage broker fee? The person getting qualified or?
Oh, so that's what's called lender pay compensation. So the bank is the one that pays us depending on the rate.
Any other questions? Of all the pages, I didn't think this one was gonna spur the most discussion. I'm happy it did.
Did you do investment?
Yeah.
Investments too?
Yep. Yeah. Again, we've got 2 or 3 slides on the next
You
presentation.
would have heard that answer.
Yeah. Yeah.
Ooh, that sounded like a Jeff comment.
On the next presentation, we got a couple slides where we're gonna walk through something. It's pretty rad. It's a really cool setup where you actually put less money down than what you normally have to. So, okay, well, any last questions on this slide? Let's see what the next slide is going to do for us.
Just kidding, Gavin.
So these are some of the back end lending partners, right? So UWM, that's who we send most of our stuff to. They're awesome. Our rep for UWM is on a flight right now, but I think if I called him, he would probably answer and like whisper to me. The dude, he's Eastern time. I was texting him last night at 12:30 and he texted us back. It was 2:30 in the morning and he responded. It's like, oh, sorry, dude. So the thing that we've found that we love about brokering to these companies specifically is they love to close loans. They love it. It's like, oh, well, you missed this thing compliance wise, but it's all right. We'll just put it in our bundle, our scratch and dent bundle, and close it as normal, right? Whereas if you're at another bank, it's like, oh, hey, well, it looks like you took a day too long to send your loan estimate, or you did X, Y, Z. Sorry, we got to restart the whole file, right? These guys don't care. They don't care at all. They want to do is just close loans.
And that's I mean, the biggest advantage wholesale over retail is like, you pick any of the major retail companies in the country, like Cornerstone, Security National Academy, they do anywhere between 1 to 2 billion in funding a month. Whereas UWM, for example, they do like 20 billion in funding a month. And so they have a lot more, since they're pushing so much more volume, they have a lot more flexibility on a per loan basis to do whatever needs to be done.
Which is awesome, right? Because that just gives us that flexibility to push down onto you guys. We get that funky loan that shows up. Hey, rep at UWM, here's what we got going. Oh yeah, okay, we'll do that. Sweet. And it just gives us so much confidence to be able to close way more loans, make it way simpler for buyers. Products and services. So again, like we do everything that everyone else does, but then we get into some of the funky stuff, right? Some of the weeds. We're actually talking about creating a product where there's a way you can have people create a trust and have that trust pay them out over the next 3 years. And then nobody like looks into the trust. Nobody underwrites the trust, right? And so it's just like, we can get so creative and so funky on how we close loans that it's really, for us, it's more of a mindset and a creativity thing rather than here's the boxes, here's XYZ, what you need to hit in order to close this loan. And then full digital experience, right? So we've got front end software systems where, similar to other companies, we send out applications remotely, e-sign, everything is good to go. And then virtual e-closings, we haven't done any of those because COVID hasn't been a huge issue here as of late. If it comes back, we'll probably have that option in the future, but we've got great title relationships as well. So if somebody needs to show up at their house, they want to close at 9:30 on a Friday evening and they're in the comfort of their apartment, then okay, title rep will be there, right? We use a couple different people. He uses a guy at Novation because they speak Spanish very well there. I use a guy at Old Republic and a few other places. So, but like fees and stuff, we don't care. If people are complaining about fees or cost or, well, last time it was this, we can leverage these guys and have them cut it a little bit if we need. So
I want to say something about lenders and the Spanish speaking people, that I'm really happy to hear this because a lot of the lenders that speak Spanish, some of them are taking advantage of the Spanish speaking people that can't communicate with all of us. And I've seen it this last year and a half. And so it's really great to see that there's actually a really good option for them, someone that's going to treat them well and actually give them a really good rate. I really like that. So I just wanted to plug that in because some people might not know that's happening right now, but it is.
Yeah, it's bad.
No,
it's
I could tell you
yeah.
that one of my deals.
Josh is not to get weird, but he's actually Chilean. So if that means anything to anybody, then probably doesn't. But
That's awesome.
Right.
I appreciate it.
The reason I bring that up is what happens is these guys, they talk to Josh and they realize, oh, it's not just a return missionary that learned Spanish in Mexico for 1.5 years or 2 years, right? He grew up, right? That's part of his culture. And so they talk to him and they just stay with us. They don't want to talk to anybody else. They trust him. They trust us.
It's awesome.
So,
And that's not weird at all.
yeah, no, just imagine if I could speak Spanish, what I'd be able to do. I know.
I know you have a pretty awesome chili story.
Oh, yeah?
Dude from Utah is talking to me and he goes, dude, my wife and I went on this amazing trip. And probably shouldn't have been at a fairness, but he's all, we were in Chile and he said, we just rented our car. And he's like, all we can, we pulled out of the parking lot into traffic and we see this random dude like leaving our car. And my wife goes, did you hear that? His wife turned to him, they looked up and this dude without his shirt on is walking backwards away from the car. Sure enough, they're like, whatever, we bumped our car. They go to drive off and they go around the corner and instantly the wife's like, we have a flat tire. Sure as hell, dude. Fast forward, the construction workers that were like kind of seeking him out, like aware of where their destination was, the planned event was like there. He goes, he did this little chihuahua dance with them, and then he like had to literally pull out his soldier attitude. And he goes, when they were like trying to get us to open up the trunk, acting like they were gonna help us change the tire, and I realized that they were part of the whole process of getting it there. They were checking our luggage. He's like, I actually like started coming undone. He's like, my hair stood up. I realized we were being profiled. Well, sure enough, dude. I'm talking to him. He goes, yeah, the freaking rental car company even was in on it. They have a setup where they get you to go to the guy for the tire. The whole thing is like a gigantic cha-ching. Right? The whole rental car insurance thing. He goes, we took pictures of it, and he goes, well, how did you fix it? He goes, we went to American Express, and American Express goes, oh yeah, this happens all the time. So be careful when you're traveling, like be aware of who you're doing business with and who you're giving your plastic to. Because sure enough, Mexico, they'll charge your groceries, they'll run your car for $700 in groceries in one day. And it's not in Costco.
I wish I could tell you that was a unique story.
Things you learn and want to learn.
A little bit on the process. I think everybody here is gonna know that, right? Pumps through, get your loan application, comes to us, disclosures, get documents, pump it through underwriting, right? Close an average of 16 calendar days. We can do refinance. The minimum federally mandated amount of days you can close a loan in is 10. If we get a refinance that comes in, they know what they want, right? Hey, refi me. I've got my documentation. That's a 10-day close for us. It's easy. And there's a lot of cases if they have a decent amount of equity in the home and they're refinancing, where we just can waive the appraisal, right? Don't need to wait for an appraisal. Don't need to have anybody pay for one. Just completely waived, which is pretty nice as well.
And those refi rates right now are what, roughly?
Well, he was saying he closed a 10-year refinance at 1.9.
So 15 would be at like 2, 30-year, like 2.75, 2.6, 2.5. Cool. Awesome.
Mid 2-ish. Then here's another page. I'm kind of hoping that this one will generate a lot of discussion like the last one, but it's not looking like it's going to do that. So we'll go ahead and skip it. And then same thing here. And so in-house mortgage broker, right? The nice part about us, I think Jeff's had a little bit of this experience. If you reach out to me specifically, like don't call Josh. But if you call me, right, I'm kind of handling a lot of the EXP relationship for Solitude. If you call me, you'll get a text back immediately if I'm not available. It's like, hey, what do you need, right? And I think that's been Jeff's experience. And Kristen's the broker for Utah. We've got a direct relationship with her. And she's had that same experience as well. So if you text me with questions or you call me, you're going to get a response, right? You're not just going to get put on the back shelf. I got 4 other loans I'm working on. It's none of that, right? Part of my role as one of the founders at Solitude is to manage this EXP relationship and make sure every agent is taken care of and questions are answered and everything's handled, right? So the priority is there. We push the loans over to Josh. So you're always going to have somebody that you can reach out to and get instant updates on your loans, right? Hey, where's this going? Haven't heard back. Okay, perfect. We send auto updates anyway, but anyway, I'll respond to you guys directly immediately after you reach out. Saying that kind of it seems like such a low bar, doesn't it? It's like such a bare minimum that's a selling point.
I do what you're supposed to do.
Yeah.
I called a lender friend today, and I had a really interesting situation where they're supposed to close last week, but they just looked at their terms today, and they have a 15-year mortgage instead of 30. Yeah. So last night I got a phone call, and sure enough, I'm just like, I gotta call a lender, and I called that lender, and I'm like, freaking never not answers my phone. Like, come on. When I needed him, I was just sure he'd answer. He didn't. That's awesome.
Again, and it's so strange to me that it's just kind of like the accepted norm that loan officers can just kind of disappear, not answer questions. right? Something goes awry with a loan, how hard is it to get one of these damn guys to answer? It's impossible. It's so crazy.
And then they don't know what's going on.
And then they don't, yeah, oh, yeah, let me pull it up and check.
Like, what was the real problem?
I saw that, the guy that kind of recruited me and said he was going to take me on as a mentor, that was how he behaved. I hated it.
Right, yeah.
I hated it, right? We always joke internally, but it's not really a joke. Like Solitude was founded on principles of vengeance and pettiness, right? Like there's a lot of people that we really think just, yeah, it's like, we don't like them. We don't like how the industry behaves, and we really want to change that image and just make it a better experience. Oh man, you're gonna cut me short like that, Jeff?
No, I'm just telling you to talk faster, dude.
So, yeah, if you guys could not ask any questions. Yeah, let me just do my thing, guys.
You've said some good things about the second one. I want to get there.
The second one is so aesthetically pleasing. I can't wait for you guys to look at it.
That's awesome.
I don't even know any of these people, but here's the reviews on us. So yeah, there's some of this. So
You made them up, didn't you?
yeah. Yeah. So there's some of those. I didn't even write the reviews either, so cool. And then Jeff's got my information. Like, we can do all that later. I'm sure we'll chat after this. I'm gonna ask you to step in and get the other one pulled up.
Yeah. Oh, we were at the end. Good.
Yeah. Yeah.
Guys, if you're online, you got to just kind of speak up. I have the volume up so we can hear you. If you have any questions to participate, obviously, you probably can't hear all of the Q&A that's going on around here, but.
Since you guys are kind of limited in the amount of people you have, how are you hitting the open houses with the new agents that are doing the open houses?
Oh, if we get invited to one, we'll be there.
Okay, well, I'm really pushing our new agents to open houses, and so, yeah, I watched someone get a seller at an open house last weekend, just like that.
Yeah.
You know, and so that's a great thing to let them know.
And that's the other side of it, is that we do have these other loan officers where if we can't personally, right? If it's a newer agent, something like that, maybe we connect them with one of our newer loan officers, and we have those guys go and work that open house together. So the bandwidth is there for sure.
Well, you've got the safety part, you've got 2 people, and then also, people don't know their mortgage options, so that's pretty awesome.
Yeah, and then we've also got list reports, which Kristen had us get set up so anybody at EXP has access to list reports, which is basically a software where you can go in, you can print off really, really well designed documents, pull up
Custom marketing for
Yeah.
any listings that you guys have.
It's really rad. So if anybody's interested in that, making your open houses a little bit more dynamic, a little better marketed, shoot me a text, I'll get you access to list reports. It's no cost to you guys. We cover all that for you. We get your free login. I think we have like 10 people at EXP using it right now.
Do you think that would be a good lunch and learn on list reports?
Mm-hmm. Hey, Kathy, can you see the slide
Kristen
share?
would be stoked if we did that. She loves list reports. So
Just give me a thumbs up.
It's like a marketing package that gives you the ability to custom make your own flyers and everything around a listing, really.
yeah, and I think
Documentation around
I think
schools.
there's some data.
All I see, Jeff, is the people in brightly colored clothing.
Okay, that's perfect then.
Okay.
Okay, we're gonna move on to the next presentation. That is actually the first slide. Wanted to make sure you guys could see it because I screw that up often. Let's see what's in there.
17 minutes, go.
Yeah.
Everybody else is talking but me. I don't know what.
If we go over a little bit, we're good. I want to get through this content. This is awesome stuff.
The pizza's gonna be late and he's gonna be, can you
Hey,
this a little
stall,
bit?
stall.
Yeah. Okay, so I know I've been kind of hyping this up. I know it looks good, guys. Don't get too crazy. It's a good looking slide. So we wanted to talk a little bit about these bank statement specific loans. It's been really cool for us because some of the guys that we partner with are, they've got lots of friends who own their own businesses, that type of thing. That's really where this slides into. And so that's this next slide. Let me see if this works. Oh,
That'll work, but I'm a bit timed out.
there we go. Okay, got it. Yeah, so what's the big deal, right? And that's exactly it. What happens is these guys, they own businesses, they're on a 1099, right? How many Vivint people are in Utah? A gazillion of them. And what they do, right? What they do is they go and they find the sketchiest tax guy that I know because I did it, right? You go find the sketchiest tax guy that you can and you say, how do I not pay the United States government, right? And that's who needs this. Business owners, 1099, anybody that Josh hangs out with, all of your conspiracy theorists nuts, right? These guys that they do not want to pay the government.
Taxation is theft.
There we go. They deduct everything in their tax returns. And so what happens is we get those tax returns, we look at it and we say, okay, yeah, I know you made $200,000 last year, but you told the government that you made 40. And that's what we have to, that $40,000 is what we have to base their qualifiable income on, right? So they're showing up, they're thinking they're buying a $1.5 million home, when in reality, it's like, yeah, you've got all this extra cash because you didn't pay taxes because you deducted it, which is smart. But now what do we do? How do we get them a mortgage, right? And so that's where these bank statement loans come in. And we'll click into this next slide. So tell us how it works, right? This is why I brought Josh. He's our resident expert at one, not paying taxes, and two, doing these bank statement loans. So he's just going to give us a quick little synopsis. I do have cheat sheets later on in the presentation. You guys can take a picture of it. You've got, you'll have access to it. And then I think Jeff's going to send out the slides if you guys want them. So we've got cheat sheets, but Josh is just going to give us a little rundown of kind of how these loans work, how they behave, and how it slides in.
Okay. So we've got a few different options on how, what kind of.
Oh, come on here.
Where you guys have to look at me. Me too. Yeah. So we got a few different options as far as what kind of documentation we could provide on these bank statement loans. Minimum is 3 months, and then there's a 12 to 24 month option. Obviously, the 3 months, banks look at that as higher risk because there's going to be some limitations, but it does work. So basically, the way that the income is calculated is it's taken as an average. So you take all of the deposits in the bank account with the term provided. So if it's 3 months or 12 months or 24, and then that's divided to create a monthly average, and that's what's used as the income. So for example, I got a guy right now, he wanted to do a cash out refi, got denied everywhere else, and was like, hey, everybody's telling me no, can you do something? I was like, I can do something. I don't know if you're gonna go for it, but we can do it. And so he, it's the same thing, he claimed like, I think it was $2,000 in income on his taxes. But he had, we did his bank statements, did all the calculations, and it came out to, I think it was like $7,400 a month in income that we could use. And that is, if you show the business bank statements, they have to take out 50% as like business expenses or whatever, and then they divide that. And even taking that 50% out, we were still left with quite a bit, and it was very easy for him to qualify. So
What's the rate difference on a bank statement loan versus full off?
depends on if it's 3 or 12, but the interest rates will range anywhere between like 3.8 to 5.3%. No, it's really not that bad, especially when you factor in like the way we used to have to do it is like people would go and amend their taxes and then have to write the government a check for like 30 grand. So yeah, there you go. Yeah, so it's like it's not great.
Does this guy have like a shanty credit score as well?
Yeah, I had a 650 credit score.
What kind of down payment do you need for something like that?
Depends on the documentation, but it can be as little as 10%. So as Jake says, the next slide is too boring to talk about. So
made it look that way. Here, this is the cheat sheet. I hate this slide, but I hope you guys like it.
I'm gonna take a picture.
Me too.
Yeah, everybody take a picture of it. But on the 12 to 24 month, 90% loan to value is the max. So just 10% down. The
Oh,
yeah,
there you go. Yeah.
The 3% or the 3 months is limited to 75% LTV. Oh, yeah, so this is based on 12 months of statements. If you're gonna do 3 months of bank statements, then you're 75% loan value. So I didn't do the 3 month one, because it's kind of an off base, but this is 12 to 24 months. Yeah, it's the most common. The 3 months is usually a dire circumstance, but
What about somebody that has well over 10 loans?
what's that?
What about people that have over 10
Yeah,
loans?
no limit there.
No limit?
Yeah, this is what's called a non-QM, so it doesn't go Fannie or Freddie. It's a portfolio product.
Catch back in the buying business.
She wasn't listening. I gotta go over this again later.
She didn't like the better presentation? I mean, I did this up the whole time.
She really takes it. Yeah, no, she has to go to a lunch, so, but no, sorry about that.
You're good. But yeah, up to 4 million on the loan amount, 600 is the minimum FICO. Some people are really picky and want the loan to be done in the name of a business entity. That can be done as well. It does require a personal guarantee. But
What you missed is I asked him about portfolios with more than 10 loans.
So what did we say?
you can do it. It's a non-QM loan, so it doesn't go Fannie or Freddie, so it doesn't matter.
Good stuff.
We battle. She's trying to pay shit off and I'm trying to leverage.
That's
It's
a whole
tough.
marriage, you guys. A whole marriage.
So no MI, no MI even at only 10% down.
Oh,
No,
wow.
yeah, which is great.
Makes up for some of the difference in interest rate as well.
For sure.
Yeah.
That is huge.
No reserves required at 75. So if they put 25% or more down, there's no reserves required. Even like on a 90%, the other reserve requirements aren't crazy. It's like 3 months. So most of them have that in their bank statements. anyways. Mortgage insurance. Yeah. And then another cool thing, no 4506T. So the bank's not going to pull the tax transcripts and try and screw everything up. No K1, so they don't have to show even their distributions from their corporation, and then no P&Ls. A lot of times on conventional loans, they'll require you to make a profit and loss statement. It's not required on this either.
It's just because of the volume that they're willing to do this.
So this particular program, it's with ACC and ACRA, and they're a non-QM bank, so they don't sell to Fannie and Freddie. It just stays on their portfolio. Basically, what they do is a ton of market research, and they see what the foreclosure rate is, and it's so low that they're just like, yeah.
Well, then based on your bank statements, I mean, I guess it's a pretty good bet.
Yeah, especially
Qualified buyer.
if you're given a full year's bank statements and you've got, like this guy, his total over 12 months was like just under $1 million.
Yeah, they're gonna lend all day.
Yeah.
Doesn't matter the credit score because they know what he's doing. He's running a business.
Right, exactly.
So did they stick with logic a little bit? That's kind of
Oh,
cool.
yeah. Oh, is that coming back?
Oh, man, that's a weird way to do a loan.
Well, and the funny thing is, these have been around
Mm-hmm.
basically as long as I've been in the business, but
Nobody talks about it.
nobody does them because
Yeah.
they don't want to.
So I bet everybody here in this room is thinking of at least 1 or 2 people that would qualify for this or be interested in this type of product for sure.
A $2 million loan.
Yeah, we'll take it.
Jake's like, let's go start now.
Do it right now. Let's sign me up. Let's go.
It's not me.
I knew that.
As soon as you said 2 million.
So I guess before we move on, any questions on the bank statement?
I might hate this page more than I hate the last one. That's-
Yeah, your spacing on
Yeah.
this is like way
Isn't it
scrunchy.
awful? I know.
Look at all that empty space you didn't even use.
I wanted to make it good because I knew people would take pictures of it, but doesn't change
You know what
how
makes
I
it
feel.
worse is the glare from the light, actually.
Yeah.
Yeah.
But so no questions on the bank statement loans for now, at least?
I need a $3 million
3.
He's saying the lawyer.
So a couple of the other things we wanted to talk about, especially since it seems like quite a few of you work with investors. Some cool things that people don't know. FHA, as long as it's an owner occupied transaction, 1 to 4 units, minimum down payment is just 3.5%. Interest rate functions the same. There's no hit on the interest rate. I've got a guy right now set to close next week on a duplex in Vernal, just giving 3.5% down at like 209,000. He's already got renters in there and everything. So
15%, no matter what, if you want to buy a duplex on a conventional loan, you're minimum 15% down.
even if you live there.
If you live there or not. So at that point, you may, if you're gonna buy a duplex on a conventional, you may as well just put 20% down and get 2 renters, right? That 3% down, like there are so many people that would buy multiple houses having to only put 3% as opposed to 15 to 20.
So what is the technical time on primary residence?
So when at closing, they're going to sign an occupancy affidavit that states that they are going to live in the property for 12 months. I had a guy, when was it, 2 years ago, he was 20 years old, bought a duplex in Salt Lake City on a Utah housing loan, so put no money down, stayed there for, I think it was like 7 or 8 months, and then bought a new property, and he was fine. Yeah. So yeah, I mean, basically,
your intention needs to be 12 months. You get it
Yeah.
in 6, you know, and then you sell it and make 60 grand. So
Your neighbor has a loud dog, yeah.
you have to have a plausible explanation as to why you moved,
Yeah.
but I mean, it's always.
You need to probably stay down.
Yeah,
you
you can
ever
find
had
it.
somebody actually go like drive by and call it though?
No,
And I heard it-
it can happen, and I always tell everybody it can happen.
Right.
I haven't-
contract for a while.
I haven't seen it.
Had the HUD contract for a while. We were just running we were running cooks at Applebee's into homes and helping them take a vacation when they closed. Because they were getting money back that FHA had put into the furnace 6 months earlier, but we had required escrows for the furnace. So I was like, dude, you bought this house with no money out of pocket and you got $800 at closing. I'll go to Disneyland. Yeah, there's products there. It's awesome.
Yeah.
The FHA, the HUD process now across the country, I don't know what it looks like. So we don't know what it looks like as far as the foreclosures or the HUD homes that are coming on the market.
They just barely released the eviction moratorium, right?
Yeah, so it might seem more.
For 18 months.
I've only done one, and it was like 3 years ago, so it's probably totally different now. But it wasn't too crazy. Another thing to note, so I know all of you are, I don't know if you work with FHA buyers or not, but the county loan limits suck. It's like 453 in Salt Lake County. For whatever reason, it's 460 in Davis County, I guess, whatever. But the county loan limits increase depending on how many units. So there's, and we can send that up too. We have the county loan limits for the state of Utah. Depending on 1 or 2 or 3 or 4 units, it's a higher maximum amount. But yeah, the occupancy affidavit there at the bottom, that's what they'll say, but as long as within reason, you can say why they're moving. Like usually it's an upgrade. So any questions on any of that? Okay. So a couple other fun things. One of the things that we can do with people that do, like if they do a bank statement loan and then they're like, man, this interest rate sucks, we want to refinance. As soon as they have been self-employed for 5 years, Freddie Mac will allow them to only show 1 year of taxes. So they only got to take the hit one time, pay the taxes, make sure they show enough to qualify for what they're trying to do, and they can just get a regular conventional loan and refi out of whatever they have. And yeah, you guys were asking about the interest rates on the bank statement stuff. It's not, I mean, it's like I said, low 3s to low 5s.
How long does an amendment like that take them to go back on their tax return and make that amendment, pay the difference, get a new set that you can use?
I mean, right now it's longer because of COVID processing times in the IRS, but typically it should only take, you know, a few weeks to a month. So it's a pretty quick turnaround to get that done. And we can actually start underwriting the loan once we have the actual, like even with the draft of the taxes, we can show, and then just by closing, we have to show that the debt's been paid. So.
This is the best class ever.
Yeah.
I mean, serious, you guys, I've seen so many options I didn't know about before.
Me too.
Yeah, I mean, that's the thing. Like I started, my branch manager at Security National didn't want to do ITIN loans, which is loans for people without socials. And so then I became obsessed with the non-QM world and just started like reading through all their guidelines and stuff and figuring out how to do these loans. So yeah, I mean, that's the advantage is like between me and Jake, we've been a part of like over 500 transactions and we've seen it all. We're at places where we had to read through the Fannie and Freddie and Freddie Mac buyer's guide to explain to the underwriters how to underwrite the file correctly. So yeah, I mean, we've got a ton of experience between the two of us, and like
Those buyer guides are like 1,500 pages long, by the way. They're no joke.
and they're super interesting too, as you can imagine.
Encyclopedia.
Yeah. So yeah, I mean, it's very rare that we won't at least have an option for you on any particular buyer. Whether they go for it or not, I mean, that's up to them, but we'll figure out a way to do it if they really want to
Push
do
to
it.
the next slide. I like this next one.
Oh yeah, this is the philosophy. If they don't foreclose, then we did nothing
Do you want me
wrong.
to stop the recording?
Yeah.
Some of the
Dude, I do have some pretty amazing stories. I mean, it is cool. When you think about what you guys are doing for families, and it is cool because there are circumstances where it's like you have how many people, and you just, I really do, my heart breaks. I mean, then I find myself going on these off-city leads, and I'm finding people in really bad situations that actually have equity, but they make $1,000 a month from state government agencies, and they're just rotting away like Geppetto in their property, and their families all even divorced them. Like 44 grandkids, and nobody ever comes to see grandpa. I'm like, what do? You go to their ecclesiastical leader, for hell's sakes? I don't know. Like, it's a problem. Like, I truly like find myself in positions where I'm like, I want to help you, but I don't know how to help you. So it's cool that you do go the extra mile.
More options are better.
Yeah.
No, some of these programs I didn't even know existed, or that were back, you know,
Yeah.
obviously we've heard of them
Back in the
before.
day, back in the Wild West, people
Yeah,
were doing them all the time.
2003, you could do whatever you wanted, right?
Oh, yeah. I don't know. I was 8, so or 10.
8.
So I don't know.
He was even doing loans back then.
Yeah.
Crazy.
Computing.
So yeah, I hope we didn't bore you too much, but obviously we'll be hanging around. So any questions or anything, just